what I did here, it's actually pretty cool. I got the entire speech from the press conference with Jerome Powell, and I focused on certain phrases he says that have certain implications that I think it will be helpful for you to know about. Let's get right into it. And starting from now, watch how many times in this video he says that he's strongly committed, or he reiterates that they're trying to get to 2% inflation. And there are plenty of examples of that in the speech and in the Q&A session where he kept reiterating, putting his heels deeper in the sand, reiterating that they're committed to 2% inflation.
Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal.
In this next part, notice he's talking about how they'll make a move, they'll raise an interest rate, but then there's a delay. That's what I always tell you.
And the full effects of our rapid tightening so far are yet to be felt. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
That last comment right there is what crashed the markets the other day. They realized, oh, he's going to be keeping rates really high for longer than we thought. That's when the markets reacted and everybody rushed to the other side of the raft. And this next part, he's citing how there's a little bit of GDP growth in the third quarter, but that if you count in the quarter one, quarter two, both of which were negative, the actual result of all 9 months is pretty much close to zero or nearly anemic.
Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year.
So let me get this straight. After one of the hottest economies, one of the hottest stock markets we've had in a generation, after all of the quantitative easing, at this point, their expectation for GDP is 0.5%. So they can say it's still positive, but it's basically nothing.
As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next.
Now listen really carefully to this next section, and I'll circle back with you on the other side of it. You got to hear this. Pay attention to every word he says.
The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
Basically, he's saying the longer there's high inflation, the more likely you're going to be expecting high inflation. And he gets a salary. He gets paid for this stuff. And I want to say I'm not trying to call him out or pick on him. He's got a tough job, and he means well, even if he's driving the economy off a cliff. That's not his intention.
And we are strongly committed to returning inflation to our 2% objective.
I don't want it to seem like I'm making fun of him or anybody else. I just want to be clear about that. And again, they're mentioning that all the moves they're making are having a delayed effect. And as I'm telling you, we're starting to see that effect. Things they've done quarters ago are going to be affecting you now.
We are seeing the effects on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation.
This is my favorite part of his entire speech, where he talks about how they don't know what's going to happen. They don't know what they're doing.
Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
And I've cut out a lot of parts where he's talking about their strong commitment and their absolute focus on 2% inflation. But the reason I'm showing you this, the reason I'm counting it, is that it's not a coincidence. He said it in the questions after the speech as well. He said it many times to the point where it's a talking point. He went out intentionally planning to put his heels in the sand and say, we're getting to 2% inflation. Whether or not they can pull it off, I don't know. Whether you believe the guy or not, one of the things he's doing in this speech is making sure that everyone is aware that they're going to be going for 2% inflation no matter what they have to do.
It's now not so important how fast we go. It's far more important to think, what is the ultimate level? And then at a certain point, the question will become, how long do we remain restrictive? That will become the most important question. But
in other words, how much pain do we need to give to you so we can pretend like we're achieving what we told you we're going to achieve. That is exactly the part that put a ton of pressure on the markets the other day. That philosophy of how long should we keep our hands around your throat. And in the next part here, you actually get the answer to that question. He's talking about how they're going to keep the brakes on for even longer, even if it's hurting employment, even if it's hurting the economy, even if it's hurting individuals.
I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move. And we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, that we'll get to that point, and then the question will be how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way.
Again, with a commitment to bringing inflation down to 2%. But I pulled out this next part because it's about the unemployment rate, and I wanted you to see this section.
It feels like we have a structural labor shortage out there where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce.
They know that raising interest rates will lead to more layoffs and difficulties for business, and eventually unemployment will increase. They know that. That's a direct effect of raising the interest rates. Part of what they're trying to do is get unemployment higher. So if you think that when the unemployment rate starts to rise, when the layoffs start rolling out, when the bankruptcies happen, that's an unintended consequence of the Fed's actions, it's actually the intended result. They want unemployment to be higher. And again, I'll just say really quickly, at this point, with or without any involvement from the Fed, the unemployment rate will increase, recession will be inbound, there will be massive problems in the housing market. All of that will happen regardless of what the Federal Reserve does. But they will do what they always do, and they will hasten the deterioration of the economy we've got going here by debasing the money, by jawboning incorrect information, by playing around with interest rates like a kid plays with a matchbook.
The level that we're moving down to next year is still a very large drop in inflation from where inflation's running now, well more than a 1% change in inflation. But remember that the jump-off point at the beginning of the year is higher.
Here's a couple quick parts about how inflation is showing signs that it's coming down, that it's going lower, as you now know, and as you knew it would ahead of time because you educate yourself from content on this channel.
The data that we've received so far for October and November, we don't have we have some remaining data to get in November, but they clearly do show a welcome reduction in the monthly pace of price increases.
Okay, guys, we're almost done. Just hang with me for one more second. This is one of the best parts coming up right now.
I don't think anyone knows whether we're going to have a recession or not, and if we do, whether it's going to be a deep one or not. It's not knowable.
I just have to jump in for a second here. I wholeheartedly disagree with what he just said. I believe it's easy to know if a recession is coming. You just have to look at the indicators that show you if a recession is coming. They're overcomplicating it to try and justify their lofty position in the world. A donkey could tell you if a recession is coming based on the types of foods you feed it.
I do think, though, that and markets are pretty confident, it seems to me, that we will get inflation under control, and I believe we will. We're certainly highly committed to do that.
That counts as another mention of their intention to get inflation under control. And he's right what he said about how markets are confident that they will get inflation under control. It's just another version of the confidence game that you see with our currency. A $20 bill is just an idea that we all agree upon. And a lot of what goes on with the jawboning with the Fed, they want to present a certain way, they want to show an intention, and then a lot of investors are saying, okay, they're going to be successful in this attempt because they're talking so tough about it. These next two sections were from the Q&A session after the speech. I only pulled out two parts from the Q&A session. These are them. And in both cases, he's identifying and reconfirming that they're going to be working towards a 2% inflation target.
So changing our inflation goal is just something we're not thinking about. It's not something we're not going to think about. We have a 2% inflation goal, and we'll use our tools to get inflation back to 2%.
And that they won't even entertain questions about if there'd be a different target or if they'd raise their target rate to make it easier down the road. He just says, no way. And I'm, again, going to reiterate that whether you believe him or not. I'm just saying this is what he said. So he'll probably at least have the intention to do what he said, whether or not he actually does it or pulls it off.
But that is not where we are at all. The committee, we're not considering that. We're not going to consider that under any circumstances. We're gonna keep our inflation target at 2%, and we're going to use our tools to get inflation back to 2%.
The reason I'm telling you all this is that so you know they are locked in and committed to doing what they have to do to attempt to bring inflation down. What that means is there's going to be a lot more unemployment, more difficulty paying floating rate debt, all sorts of negative ramifications, probably a lot of problems with the stock market too. Because at this point, they'll be much less likely to do anything other than what they just told you 12 times in a row what they're going to do. I don't know if they're going to be able to pull it off, but they're going to at least try to. And that is going to have a lot of effects and ramifications on you directly. We got plenty more videos just like this one coming up, but we need your support. Please consider joining the PeterLeeds.com army. You guys are what drives all of these videos now.